So on Friday, I ended up going 4 for 4 on the day with a flawless victory green streak. With that being said, I'm going to be walking you through the unique trading strategies that I used to make multiple 100% profit returns, day trading SPY and SPX 0-date option contracts. Let's get straight into analysis. So in terms of the trades, it starts off at 11:05 a.m. You guys know I prefer to trade later into the day. I like to wait for the chart to become more developed. I like to wait for those 30-minute candlesticks to close in the beginning. So with that being said, I started off trading at 11:05 a.m. 5 minutes after that new 30-minute candlestick opened up, I ended up buying 553 SPY calls for 48 cents a contract. In terms of why did I decide to buy these call options? So I typically start off by dissecting, by breaking down the daily chart pattern. I'm looking for specific patterns that are repeating themselves using the daily chart. And with inside of Team Roar, we've been capturing these patterns every single day at the speed of light. So this was the main foundation in terms of the overall direction on where the market was going, along with the key levels in the market game plan. So with that being said, you can see you have this red candlestick facing down. You have this red candlestick facing down. Then you have this red candlestick facing up. Then you have this red candlestick facing up. Then you could see you have 3 bullish green candles. You have 3 bullish green candles. So I noticed that a pattern was repeating itself for 4 days in a row. 1, 2, 3, 4, right? And on the 5th day, it's going to try to close bullish green at the highs. So that's what led me to be more long biased on Friday. And then in terms of the game plan, if you looked at the game plan inside of Team Roar, it called the exact low of day. The game plan was to buy the dips above 551.12. That was the exact lows on the day. But with that being said, that daily chart pattern was the main reason that led me to be bullish. So if that's going to help me become bullish in a sense, from there, I'm going to have to find a proper opportunity to trade. And what I do is I measure the history, I measure the moves. So it's going to repeat itself in similar cycles, but you have to actually confirm that this history is going to repeat itself. So you can see right here in terms of this day right here, this was supposed to be the 3rd green day. It had a small drop under the previous closing price, and then it closed strong at the highs. So if history repeats itself in a similar cycle, it can have a small drop under the previous closing price, then it can go strong at the highs. Why would I have strong conviction in that history repeating? Because this pattern has been repeating itself 4 days prior. That's why. So I was looking at SPY, right? And if you just take a look at the previous closing price, you're going to see, look at these patterns, right? So then I'm breaking it down. You can break down the chart from the daily to the 4-hour to the 2-hour to the 1-hour to the 30-minute. My main preference is the 30-minute. I have seen good confirmations, good patterns, good trends with the 1-hour. It's just there's more of a rarity. What I've noticed is it's more of a rarity the longer time frame you go. So keep that in mind. And you want to kind of stack this all in your favor, right? So I'm showing you how I kind of dissect this chart. I'm looking at these patterns. I mentioned this trading strategy in my last video. Remember the green, red, green? Look at this pattern. On an uptrend, and one of the ways you can confirm that it's going to have an uptrend is by using the daily chart, but you could just see right here, green, red, green at the previous closing price, and then it goes up for 5 30-minute candlesticks straight. And then you can see green, red, green above previous resistance, then it continues to go up. And then you can see right here, previous day highs, green, red, green, continues to uptrend. And remember the wicks, it likes to retest the high of the wicks, it likes to retest the high of the wicks, it likes to retest the high of the wicks. All of this stuff that I taught you within the past videos, these strategies, they just keep on printing at the speed of fucking light. But you got to be able to capture these trends in real time, and you have to know how to use it properly. It gets more advanced than this, right? So I'm showing you all these patterns. You can see how the green, red, green is consistently working. It's consistently uptrending. And I'm looking at the chart, and I'm saying, okay, previous day highs is right around here, and there was a break above the previous day highs. So when you see a breakout above previous day's highs, when it drops back down to those previous day highs, it's going to try to react to support. And the daily chart told us if this pattern is going to continue to repeat itself, it's going to try to bottom at the previous closing price, slightly under the previous closing price. So I'm looking at the pre-market, I'm saying, okay, it broke above yesterday's highs. So when it drops back down to yesterday's highs, along with the previous closing price, that's going to be a key level in this sense because of the history repeating itself. If it repeats in a similar cycle, you know, showing you that daily chart pattern, that it's going to try to bottom slightly below this white line, the previous closing price, right? So I'm looking at this and I'm saying, okay, this overall zone is reacting bullish. History is repeating itself. And I'm looking at the patterns and I'm saying green, red, green. And what did I tell you about the wicks? When bullish patterns form, when bullish confirmations form on the day, SPY, SPX, it likes to spike back to the high of these wicks. You have a green, red, green bullish pattern. It's slightly dropped under the previous closing price. And then on the 30-minute, look at this again. Green, red, green. And you see how it tests the wicks, and it's bottoming at that previous closing price. Look at how long it held the previous closing price, forming these green, red, green bullish patterns, man. The same patterns where SPY has been uptrending with that bullish daily chart pattern that I've been showing you throughout these videos, man. We've been capturing these trends and calling out our trades real time with inside of Team Roar, man. It's the same pattern that's repeating itself to a similar cycle, to a fucking T, man. So in terms of 11:05 a.m., you can see right here, 11 a.m., this 30-minute candlestick, right? As soon as it opened, 5 minutes after the opening, I bought calls. Why? Because look at the pattern. Green, red, green, bullish move to the upside. Green, red, green. There's a floor with this bullish pattern above the previous 30-minute resistance, above the previous 30-minute candlesticks. We now have a floor above the previous closing price, man. This shit is like fucking Squid Games. Green light, red light, green light. And then what happens after that? It starts to uptrend for typically an hour minimum, but it has to look a certain way, typically on a slanted uptrend. You don't want to be buying into these patterns on a downtrend. It has to appear a certain way. It's not just colors. The candles have to look a certain specific way, and you have to dissect this. Like I said, I dissected it with the daily chart. Think of everything that I stacked into my favor using this pattern. It's not as simple as just saying, okay, green 30-minute, red 30-minute, green 30-minute. No, look at everything I stacked. The pattern has been working for several days. It's been on a slanted uptrend. It's been working very well when it reacts to the previous closing price. I used the daily chart as a confirmation. What did the daily chart tell us? If history repeats itself in a similar cycle, it's going to start to bottom slightly under the previous closing price. It's holding previous closing price for hours, forming all these bullish wicks, all these bullish patterns. And this right here, what more of a confirmation could you want? If you were not in calls after 11 a.m., you truly slept on an amazing opportunity that was highly predictable, man. I could have tried to just jump right in using that same pattern at market open, and it would have worked. I could have done that, but you see, I like to wait. I like to kind of wait for that history to truly develop, to truly repeat itself. That's how I look at it, man. If you capture a trend later on, you're much better. It's likely going to work much better off in your favor instead of trying to be the first one to capture that specific trend, man. But you could try to be the first one to capture the trend. I just prefer to wait later on. The longer you wait, the more stocks, the more confirmations you can use in your favor. In terms of the stock, waiting later on, I had another green, red, green pattern, and it was forming support above the previous 30-minute candlesticks, above the previous closing price. So when that 30-minute candlestick was about to open at 11 a.m., that's why I decided to buy those call options. So if you go to 11:05 a.m., that's when I sent out my real-time trade alert. In terms of 5 minutes after, I was waiting just to see if it would start to bounce. And you can see on the 1-minute chart, green, red, green. And then I bought right here at 11:05 a.m. As soon as I got into those calls, they started to rocket. The pattern was working to a T because like I told you, when that pattern forms, it's going to try to uptrend typically for 1 hour minimum. So I got in at 40 cents, and then at the speed of fucking light, just 9 minutes later, I ended up selling at 79 cents. So that's the overall recap on how I was able to make a 50% profit return on that trade. And the winning does not stop there, man. And I made it very clear the focus is to buy dips for the rest of the day on 50-cent pullbacks on the SPY because that bullish pattern was repeating to an exact fucking T. If you're getting all the confirmations, all the stocks that history is going to repeat itself, midday or later into the day, that's your confirmation to really start taking advantage of this overall price action. So in terms of the overall trades that were made on the rest of the day, I did end up buying 554 calls at 49 cents a contract. They went to 150 plus. I sold those for a smaller win. In terms of the next trade, it was let's buy SPX 5570 calls at 105. I sold these calls at the exact fucking peak when they hit 200 for 100% profit return. And then this trade, let's buy SPY 55 calls, 12 cents, right before the 30-minute candlestick closed, man. I want to go over this trade. At 3:24 p.m., I bought these at 12 cents a contract. I ended up selling these into the mid-20s for nearly a 100% for a 100% profit return on these contracts. Why did I decide to buy those? So I'm going to walk you through the chart on SPY. We're going to go back through the 30-minute chart. So you can say, in a sense, in terms of one of the trading strategies that I've created, the foundation can start with the daily chart, but if there is no daily pattern, then it starts with larger time frames. It could be the 1 hour pattern. It could be the 30-minute chart. My main preference is the 30-minute chart. I have seen, though, some good patterns with the 1 hour chart, man. I would really encourage you to use multiple time frames when you're watching SPY, when you're watching SPX. Look for daily patterns. That could be the foundation of history and confirmations you're looking for. And then at all times, I'd be studying the 30-minute chart, the 1 hour chart, and the 1 minute chart. So that's how I break it down, man. Me personally, I've never shown too much interest. I've heard good things about the 5-minute chart. I've never shown too much interest in using it. I like to really break it down, micro and macro. So in terms of the micro, 1 minute, and then in terms of the more macro, 30-minute. That's how I really like to break it down. I find a good balance in that, using the 1 minute and the 30-minute. And then larger time frames, you can use the 1 hour and then the 1 day. Those are my main favorites with all that combined. So with that being said, let's go right here. So why did I decide to buy call options right before this 30-minute candlestick closed? So right before this 30-minute candlestick closed, this candlestick right here, this one closing red, why did I decide to do that? It's the same pattern. Look at the pattern. Green, red, green. Green, red, green. We know it likes to uptrend. We know it likes to uptrend. We know it likes to uptrend for typically 1 hour straight when it forms that pattern. So I'm looking at the pattern and I'm saying, okay, it's consistently forming floors at that previous pattern. See the green, red, green, breaks above resistance. Where's the new floor? The new floor is above the previous closing green, red, green pattern on these 30-minute candlesticks, or towards just the previous, towards the previous lows, right? And then you can see it breaks above, it forms a higher floor above previous resistance, above the previous green, red, green pattern, right? And then you can see the same exact pattern. Green, red, green has a breakout, forms a new floor above the previous resistance. All the confirmations that this is going to have that strong bullish closing day. The longer history is repeating itself, the more bullish patterns, the more bullish confirmations, it's going to continue to repeat, and it's going to continue to close strong at the highs, man. So I'm looking at this and I'm saying, okay, we have a green, red, green, and the bottom is above the previous green, red, green, and it had a breakout. So there was a break above resistance. That means that it's maintaining bullish. Now, this specific candlestick, literally a couple minutes before it was about to close, it was closing red like this. And that was a bullish confirmation that the SPY is going to try to retest and break above these wicks, man. I tell you all the time, these wicks. I tell you all the time. Look, there was this wick in the pre-market right here. Green, red, green. It breaks out. It tests the fucking wick. With these bullish patterns, you need to align yourself with those wicks. It keeps on retesting the high of these wicks, retesting the high of these wicks, retesting the high of these fucking wicks, which is great opportunities to buy the fucking dips. When it breaks out, drops back down to previous resistance, buy the dips at that previous resistance when it tests for the first time. Or you can buy towards the bottom of these wicks, and then sell towards the high of these fucking wicks. But looking at this pattern, I'm going to show you, this was the same candlestick, man. You need to pay attention to this candlestick. When SPY is on an uptrend with the 30-minute chart, and you are seeing this red candlestick right here close like that, odds are the next 30 minutes is going to be bullish, and it's going to spike back towards the highs of that 30-minute candle. So I noticed, and typically when I'm using the 30-minute chart, I'm focused on the 10-day 30-minute chart. If you're not seeing any patterns within those 10 days, you can go further back. You can go as far back as you want to find some specific pattern, but you really don't want to hunt like short-term patterns that far back. In terms of history repeating itself with short-term patterns, in my experience, that works best when you're doing it on a smaller scale, on a smaller time frame, not going too far back in history, more like 10 days, right? You can go further back just to get some recognition of what these patterns can do. But in terms of history repeating itself, when you're trading on a smaller time frame, it really tends to work best in a sense when you're focused on that 5-day 30-minute chart or 10-day 30-minute chart. But this was the pattern, man. You can see right here. It's the same fucking candlestick, man. It's the same candlestick. It's on a slanted uptrend. And then the next 30 minutes, it has a small drop below the previous 30 minutes. So that's how you measure moves. You just see what it did in the past and you measure the move for some sort of entry. And if you want to get more precise about your entries, that's what I do. I use the 1-minute chart. I'll trade based off of a 30-minute chart to get a sense of where I'm going to enter and what I'm looking for with the history. And then I'll use a 1-minute confirmation to identify, okay, it's reacting bullish. It's flipping bullish. So you can see right here, it's the same exact candle, has a small drop, and then it closes bullish at the highs. That was the confirmation, man. And I'm doing this on recent patterns. You can see green, red, green at the previous closing price. Green, red, green. But just look at this red candle, next 30 minutes on opening, bullish close. So that is what led me to play calls basically once this 30-minute candlestick closed right here. And then as soon as I got into those calls, it began to skyrocket and close strong at the highs. And we literally sold at the exact fucking peak. And we switched to puts, man. This was absolutely insane. I sold the exact peak on calls, literally at 3:52 p.m., I believe it was. Right here, I exited all my call options at 3:52 p.m. As soon as this 1 minute candlestick opened up, I exited my call options right here. As soon as this opened up, the main reason why I exited was, these were already going, the calls that I bought, they already went in the money. And then this is like a bearish tip right here. I don't want to risk it with a couple minutes left on the clock. They were already up 100%. I'm locking in gains in that sense. And then the chart was just showing signs of exhaustion and bearish signals. And if you also looked back throughout that daily pattern, this was the daily pattern, you could see there was just a small little tip, a small little wick, and that could have been directly into the close. You can go back and dissect that. But odds are there was going to be a small little micro drop into the close. The way the price action was, reading, it was basically saying that those 555 calls were not going to close in the money. So I sold them at the exact peak at 3:52 p.m. for nearly 100% profit return. And then as soon as I got out, I switched to puts. I bought these puts at 25 cents a contract, these 555 puts. I bought them like 9 cents out of the fucking money. You could have held them into after hours. They went to 69 cents a contract. I ended up selling those puts at 41 cents a contract. So those were the overall trades on how I went absolutely flawless on the day. This should help you in a sense in terms of what to look for, man. I'm telling you, nobody else is teaching you this because this is something that I've developed and I've created on my own. This is how I visually read the market. I'm always looking for patterns. I'm always looking for trends to repeat themselves, and I'm trying to stack everything it is that I know about trading and price action in my favor with that overall chart, man. I'm trying to stack everything. You can stack more if you wait. If you get in directly at the market open, you have less to stack. If the chart develops more, you can stack more, right? So like on a bullish pattern, okay, let's wait for a break above resistance. When it drops back down to that previous resistance, it's likely going to react to support because the pattern said it was going to be bullish and it had a breakout. So previous resistance reacts to support. We're going to buy the fucking dip. We're going to sell the new rip, right? So in a sense, this is some of the basics and some of the foundations to one of the unique trading strategies that I'm using with the daily chart pattern, dissecting it down, using the 1 hour chart, using the 30-minute chart, using the 1 minute chart. Those are my favorite time frames in terms of everything I've experienced with everything. I would tell you the true best ones, the daily chart, the 1 hour chart, and the 30-minute chart, and the 1 minute chart. The 30-minute chart, that is my absolute favorite. The 1 hour chart, and like I said, if you use the daily and use the 1 hour, you're going to see it's more quality over quantity. There's going to be less in play, but once something is in play with the daily chart or with the longer time frames like 4 hour, 2 hour, 1 hour, once that's in play, you stack that with what you usually do on the 30-minute and the 1 minute. You stack it all fucking together, and you're invincible. You're fucking unstoppable, man. People are going to be like, how the fuck are you reading the market this fucking well? Because you're stacking every confirmation, every time frame, everything it is that you use to profit within the market. Confirmations, price action, indicators, multiple time frames. Everything it is that you use personally to get a sense of this overall price action, where to enter, where to exit, everything it is, right? You can stack that in your favor, but you got to stay on top of that, man. You have to keep on dissecting and keep on staying on top of all these bullish patterns, man. So I wanted to walk you through all of that overall price action that I was seeing on, on Friday that we were trading in real time and alerting all the trades that I made in real time. Now, if this pattern keeps on repeating itself, you already have a sense on what it is that I'm going to do on Monday. So this is what I'm looking for personally. I rarely swing trade. In some situations, I will swing trade when it makes sense. If you guys watch my videos, I told you 550 was a clear level for the bull trap. It worked twice. You could have day trade, you could have swing trade puts. So we have a pattern that has been repeating itself for 5 days straight. You see this? 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. The candlesticks are nearly identical, right? I told you history is going to repeat itself in similar cycles, not to an exact fucking T. But we have a pattern that's been repeating itself for 5 fucking times. So you're going to want to go back to this day right here, June 20th, and you're going to want to see how the SPY is reacting. Keep an eye on the pre-market resistance. Keep an eye on market open. If you look at the pattern, it had a small breakout. And again, this is how you measure the moves. Right here, it ended up closing at 548.49. And then the next day, it went to 550, right? So it went up $1.50, and then it had a massive crash. And then you could see it close towards the bottom middle, right? So the point is, on Monday, there's likely going to be a great opportunity to buy put options and short the market open. So I'm going to be looking for a morning spike and a bearish or a trend reversal, 30-minute, 1-hour confirmation on the chart early into the day, 10, 10:30, 11 a.m., and then I'm going to be looking to hold for a much bigger win because that history is going to repeat itself in a similar cycle, right? But you have to confirm it. You can't just say, we're going to have a small gap up and then it's going to crash. That's what you look for. You look for a small spike, a small gap up. You look for a test or break above previous pre-market resistance. You look for bearish confirmations. The reason why you're going to want to look for that is because you have to put the cards in your favor. You have to put the odds in your favor. You understand? This pattern has been repeating itself for 5 days straight. Why the fuck would I not be looking for this pattern to repeat itself? Why the fuck would I look for some sort of confirmation that this pattern, that this history is going to continue to repeat itself? You understand? I'm not just saying history is going to repeat itself. No, we're focused on this history, right? We're identifying these trends, but we're confirming it. We are using the chart to confirm that this history is going to repeat itself. Use the 30-minute chart, use the 1-minute chart, you could use the hour chart. That's one of the things that I'm going to be looking for is a major bull trap on Monday morning. And if you look at the overall chart, it could be a great opportunity to swing trade. So hell, if you wanted to swing trade puts, if that's just something that you wanted to personally do, by all means, go for it. Looks like a great confirmation. If you're seeing some just bearish 30-minute confirmations, trend reversal 30-minute confirmations, that market open, it looks like a safe overall swing because even the next day it gapped down and the next day it went red. So it looks like we're setting up for a great bull trap opportunity. And I'm putting myself with this history that's likely going to repeat itself if we can get the proper confirmations. We have the plan on what to look for. Now we just need to patiently wait for the chart to develop, for the chart to confirm ourselves instead of just jumping in and saying that this is going to continue to repeat itself. You see how patient I was on Friday? I was very, very patient. I waited until 11 a.m. I said, okay, what am I looking for? Well, if you looked at the daily chart, I made this very clear and I made this very simple for you. It was supposed to have a bullish, strong bullish closing day if history repeats itself. You can see right here. This red, this red, this red, this red, and then 3 green, 3 green. So right here on the second fucking green, has a small little tip, Next day, small little drop under the previous closing price. So what am I going to be looking for? Similar cycles of history repeating itself. So it said it was going to close strong at the fucking highs, and it said it could potentially bottom a small drop under the previous closing price. So what's it doing? It's breaking above the fucking highs. That's bullish. It's bottoming at the previous fucking highs. That's bullish. It's holding for a very long period of time. This is another thing, man. If there's a break above SPY and it drops back down to that previous resistance, if it's just fucking holding for an hour, 2 hours, 2 hours and 30 minutes, and you see some sort of bullish confirmation, bullish, price action, candlestick, chart pattern on the fucking 30-minute time, what the fuck do you think it's going to do, man? Isn't that enough? The history's going to repeat itself? You have the green, red, green. That's an hour and a half. Fucking, it's just sitting here for 3 fucking hours at the previous closing price in the fucking pre-market. And then an hour at the market open, then you have the green, red, green, and it's above the previous fucking highs. It's testing all the fucking wicks right here. And then there's a new wick to test here. There's a new wick to test here. What did I tell you about the fucking wicks? Wick to test here. This is why I'm buying fucking calls at 11 a.m. directly at market open, man. The fuck? I'm not going to let the pattern slip at any fucking longer. I waited long enough, right? Some people, they just like to jump right in. By all means, if that's you, you do you. It's just me, personally, that's just not me right now. Maybe in the future, maybe I could be more of a morning trader. That's just not my interest, man. My interest has been just waiting for the chart to develop more, waiting for more of a confirmation. It's going to give me a feeling that's a lot more safe, a lot more developed, a lot more confidence, and a higher fucking win rate. I'm telling you, man, this shit can flip back and forth at the speed of fucking light at market open. Some people can do it very well. Others can, and then others just choose to avoid it. You don't have to trade market open, middle day power. You can just do very, very well trading one session. You have to figure out what works best for you. For me personally, what works best for me is the middle of the day and power hour. Power hour is my favorite trading session. Middle of the day, I will look to make 1 or 2 trades at times. It just can be a little bit slower at times. But I like that 11 a.m., 12 p.m. mark. I like in between there. I just don't like getting in directly at market open. I've never been too big of a morning trader personally, simply just because there's lack of chart development. And then in terms of what I would consider dangerous is with the specific trading strategies that I'm using, if there's lack of development and things can flip very fucking quickly in the morning, that's going to set me up for fucking danger, man. If something can flip and is extremely volatile very, very quickly and there's lack of confirmation, lack of development, that's just going to set me up for a very dangerous situation. That's one of my main reasons why I prefer to wait, man. Like I said, if history is repeating itself for several hours, multiple days, multiple fucking weeks, the longer it continues to repeat and continues to happen, the more confidence I'm going to gain that it's going to continue to repeat. This is why I was so fucking confident. For those of you in the chat, just reading everything I wrote about all of the analysis that I was sending out, all the price action analysis, all the trades going 4 for 4 plus on the day. That's why I was so fucking confident, because I was well aware that there was a pattern on the daily chart repeating itself for 5 days straight. This is why if I see confirmations on Monday, my confidence is going to be through the fucking roof, man. Nobody's doing this. Who the fuck do you know that's talking like this or showing you this? Nobody, because I'm the one that created this fucking system. And these are some of the basics, man. This is how my unique third eye sees the fucking market. And that's what I'm trying to do. I'm trying to open up your third eye so you can see things differently and gain new perspectives on the market, so you know what to look for and so you know how to read it personally, man. Because you got to be able to capture these trends in real time. You got to understand, man, the masses, they're not fucking unplugged, man. They don't know how to capture this in real fucking time. They don't know what to fucking look for. They have not escaped the fucking matrix yet, man. You have to fucking escape. So with that being said, that's the overall analysis on what I had to say about SPY and SPX. You're well aware on what is that I'm going to be looking for on Monday morning. And look at this, man. This is just another confirmation. I stack everything. And this price action right here, this big move in after hours, right? That, in a sense, it could just want to retest that fucking wick at 550 fucking 2, and then that's a great confirmation to start locking in profits if you do take those puts as a fucking day trade. And I already aligned you up for the swing trade. So look, man, for those of you who are serious about making money and you want to get access to our real-time trade alerts, our real-time market analysis, our real-time game plans within the chat, it's going to be the first link down below within the description. You can join us inside of Team Roar, and you could trade with me and G Roar inside of Team Roar. It's going to be the first link down below within the description. I can assure you we are going to absolutely crush it next week. I will see you guys within the chat.